Good afternoon. My name is Marc Faber. I'm the editor and publisher of the Gloom, Boom and Doom report. I manage money and I always have some exposure to gold.
Dr. Faber, thank you so much for joining me.
My pleasure, thank you.
So why don't you walk me through your own personal story? Growing up, how you eventually got into finance, if you can do it in 2 minutes or less.
Okay, that's difficult, but anyway. I was born in Switzerland in 1946, and I grew up, in other words, after the war, in a comfortable family. But of course, because of the war, everybody was very cautious, and we were always saving a lot of money, and we always distrusted paper money. And I went to school in Zurich, and then I studied in Zurich and the London School of Economics, and completed a PhD about Sir Robert Peel, who launched a financial reform in 1842, where he abolished numerous taxes, indirect taxes, and the navigation laws and the corn laws, and he introduced as a permanent measure an income tax, which was levied on very few people and only at 7% of income.
Right.
Then I was looking for a job, and in my days, in the 70s, if you had a university degree and a doctorate title in Switzerland, it was very easy to find a job. So I had different opportunities and offers, but I wanted to essentially leave Switzerland, and someone advised me to either go into advertising or into the brokerage business, because in the brokerage business you could learn a lot, and I decided for the brokerage business because it paid so much more. And the 70s were horrible years. Mm-hmm. I started to work in 1970 in New York, but they were horrible years for brokers and for the whole brokerage industry in the US. Most of the firms went bust or had to merge. And I once complained to my boss and said, why is the bonus so low? And he said, Mark, don't you worry. We're still the most overpaid people in the industry. And that has remained up to this day. The financial sector, although it's not doing well at the present time because of all the passive investments and ETFs, it's still a very highly paid industry compared to someone who is an engineer or so. So that was it on Wall Street. And then in 73, White Wealth, for which I worked at the time, said, would I like to go to Asia? So I said, I will have to see. And then they sent me for a 3-week trip to Asia. When I came back, I said, yeah, I like it. So I then moved to Asia. Mm-hmm. I never went back to the US or to Europe for living, except for traveling.
Well, I mean, you live in Thailand now.
Yes.
When did you start your newsletter? What was the impetus for that?
I think I started to write already in the 70s when I was at White Wealth, because I noticed that White Wealth was a very US-centric firm, and that the bias was always to belong. White Wealth was well known for growth stocks, and all of them collapsed by like 80% after the 73, 74 bear market, including Kodak and Polaroid and Sears and so forth and so on. And so I thought maybe someone has to write a little bit a different perspective. So I wrote for my clients, because I was managing money, private client money in Asia and some foundations and institutions. And then when I joined Drexel in 1978, I continued to write because our strategist was Abby Cohen, the eternally bullish Abby. And so I thought I have to offer a different perspective from time to time. And because I was involved in Wall Street from both sides, largely bonds, because White Weld was a famous Eurobond issuer, and also equities, I had a slightly different perspective than just the equities people, because by 1981, there was a lifetime buying opportunity in bonds when the 30 years was yielding over 15% in September 81. And I thought that kind of a yield is very attractive compared to equities.
Right.
And so we invested throughout the bull market, essentially up to this very day, we invested a lot of money in bonds.
Going back into your childhood, you had mentioned that your family never really trusted paper money because of what had happened in Europe at that time. What was your relationship to gold growing up?
In Switzerland, people like my grandparents and even my parents, having gone through, my grandparents, not just one war, but 2 world wars, and the German hyperinflation, and the Depression years. And my grandfather on my mother's side had a large hotel in the mountains, so you can imagine World War I was a disaster for business. The Depression years were a disaster for business, and World War II was also bad. Luckily, his hotel was situated in the mountains in central Switzerland. So we had in the Swiss Army a lot of soldiers staying at the hotel, because that was the ultimate fortress of defense, the central part of Switzerland. And number 2, we had interns from England. These were prisoners of war, but somehow they had managed to get into Switzerland, but we had to essentially intern them to the Swiss Army.
Right.
We couldn't let them go. And so they were staying there, and so the hotel survived, I mean, in reasonably good shape. But my family always had some gold coins in a cupboard or hidden, I don't know where. But that was the tradition, to always maintain some gold.
What was your relationship to money in itself growing up? Did you care about money? Was it an important thing in your family's life? And then how is it translated into your view of money today?
Well, in my family, they never talked about money, except my mother said this is becoming more and more expensive, and the cost of living is going up, because these were the 50s and 60s where inflation picked up, and there were hefty consumer price increases. But in general, I have to say, until say recently 10, 15 years ago, the salaries were very relatively high compared to say asset prices. So with a salary, my grandfather on my father's side, he was an engineer, but he had a Rembrandt in his house, which he had acquired himself. He had several other well-known painters, which an engineer today could not buy. It's out of the question for an engineer in a company to buy a Rembrandt. But in those days, it was possible. Also, he had a nice house, and so forth and so on. And so asset prices were reasonably depressed, partly because of the high interest rates we had starting the 60s, 70s. My family, they seldom or never talked about money, but interestingly, my father, who was a very famous and successful surgeon, orthopedic surgeon, when he talked about someone who is rich, he said, "Oh, this person is a millionaire. He has $1 million." That in the 50s and 60s and 70s was a lot of money.
Right.
Today, $1 million is nothing at all. Small change, unfortunately.
Right.
This is when people talk about, oh, there is no inflation in the system. This is nonsense. Compared to assets, money has lost a tremendous amount of purchasing power. What you could buy in the 70s, 80s on the west coast of the US in terms of properties, on Park Avenue in New York, Fifth Avenue, Madison, and what you have to pay today, these are different worlds. And so when people say there's no inflation, I can say, well, some things have gone down in price, maybe a computer and maybe a mobile phone, considering that you have more power. But you understand, you and I in our lives, we would not be able to survive today with the computer we had 20 years ago, because the files have become so much bigger. And the system demands you get an email, basically it's impolite not to respond the same day. Many people I know, they never respond anyway, but I do.
It's very true. So at what point in your professional life did you realize that gold was something that you should be paying attention to?
You see, at White Weld, one of the problems was that they didn't deal in commodity futures. And the 70s, as you know, were boom years for oil. Oil went from $3 in 1970 to over $50 on the spot market in 1980. And gold went from $35 in 1970 to $850. So at the end of the 70s, there was a huge gold and silver and commodities boom. And in Hong Kong, I remember well, because 78, I joined Drexel, and one of the reasons was that they traded in commodities. And we had a market-making facility, London Gold, and we traded 24 hours a day gold, and people would come from the street. We had a visitors gallery in our office, and they would stay the whole night and come in the afternoon again to trade London Gold.
Wow.
Because at that time you didn't have internet and you didn't have mobile phones, so people had to go physically to an office to trade stocks. And at that time I had a very large gold business because I had some Indonesian wealthy people and gamblers, and they bought and sold millions of dollars of gold every day, trading in and out. So they were very good clients. But then after 1980, the gold price collapsed, rebounded and collapsed again, and then we had a long bear market basically until 1999. And in the 90s, I started to buy every month some gold because my business was good. I had a lot of assets in cash and bonds and equities and some real estate. But I thought it's good to have a diversified asset outside the banking system and not financially related. So that's why I bought and accumulated gold. I think most of the gold I own, I acquired below $300.
Interesting.
I still buy every month some.
You do? So physical gold, or what do you
Physical,
like?
yes.
Physical gold.
And I store it in a safe deposit box.
Interesting. So obviously you know that it seems like central banks, especially in the Western world, have totally discounted gold. They don't even want to talk about it.
Well, because gold is an embarrassment to central banks. Now it's been replaced by bitcoins. That's an even bigger...
So you believe that gold is being slowly replaced by Bitcoin or digital currencies?
No, I don't believe that. I think if you really think about society today, what is our vulnerability? It's unlikely that someone would invade the US. I mean, nobody is as foolish as that.
Sure.
It's unlikely that someone will go and invade China. They may provoke China, which would lead to some confrontation, say in the East or South China Sea, or say in North Korea, which is supported by China. That is possible, but an invasion of China, the way it happened repeatedly in the 19th century and early 20th century, the attempt is out of the question. So I think the vulnerability of societies is less in direct big world wars, but wars that are fought with, not with tanks. They are fought by, say, somebody could switch off the light in New York, or the electricity,
right,
or the internet. If you switched off the internet, what would happen? First of all, nobody could go shopping, because everybody shops with a credit card.
Right.
So that the department store wouldn't know what to do with it, and so forth and so on. So in these times, you want to actually have access to something physical that is a recognized exchange, a medium of exchange. The Bitcoin, in a situation where the internet collapses, would not be good because you wouldn't be able to access it.
Right.
Now, the Bitcoin and other cryptocurrencies, they have one advantage. If, say, you and I, we have 100 kilos of gold, to move it in and out of the US through airport security would be very difficult.
Right.
They would question us for hours, why and where and how.
Not to mention a little heavy.
Yeah, well, that we could hire someone to carry. We could take our elephant along to carry it. But you understand? So there are some difficulties in moving gold from A to B. So say you live in A, but the gold is in C, overseas.
Right.
You may never have access to it in case of emergency.
Yeah.
So you should have some of it right where you sit or sleep.
Right. Right.
That's a consideration. With Bitcoin, as long as the internet functions, I can essentially buy Bitcoins in China, and then I can liquidate them when I'm on a trip in Canada or the US.
Sure.
And that may be a reason why these cryptocurrencies have performed so well, because people basically who want to move money from A to B, they have now this opportunity.
Right, right. But as you say, ultimately, if everything hits the fan, gold is still the ultimate protection in terms of having physical gold. So,
well, you can't eat it. That's something, but you can exchange it for food.
Right.
And it's interesting, I've seen countries that are really in distress. Say, during the hyperinflation in Argentina, something very interesting happened, which I observed. In a hyperinflation period, people don't want to have cash, paper money.
Right.
So the farmers who grow products, meat and wheat and corn, they don't want to sell it. Because the moment they sell it, they get paid in cash, and that cash depreciates by, say, 30% within a month. So they're withholding the supplies, and even in a country that is in agriculture extremely rich, like Argentina, there were food shortages in Buenos Aires.
Wow.
In the capital.
Right.
And so, you know, in a case of emergency, the best is if you probably are in the countryside and you are able to fulfill your daily needs from your farm or from the local community. Say, I live in Chiang Mai. I don't live there because of these considerations, but I'm always thinking, if anything happens and global trade is curtailed and the supply chains are interrupted in a big city, maybe you don't have access to anything. Maybe even to get water would be difficult. So in the countryside, you have so many farmers around the city of Chiang Mai, there's never going to be a food shortage. And by the way, this is one of the problems of Thailand, the abundance of food. So people become lazy.
Interesting.
You understand? In countries where there's shortages of food, where there's long winters, where people have to put something aside for the winter, the farmer or the city dwellers, people save more and are more prudent. In Thailand, it's happy-go-lucky. Everybody has to eat. If things go bad, you go back to the family in the countryside and you don't do anything for 3 months except harvest your rice.
Well, okay, you painted an interesting portrait of what would happen if you turn off the electricity in New York, these sorts of things. So today, to what degree is gold still tied to big geopolitical events?
The price of gold was, say, around $255 in 1999. Then it went to $1,921 in 2011, and since then we've backed off We were down to around 1,000. Now we're around 1,200 and a bit higher. The performance of gold, if you compare it on charts with, say, the Nasdaq, is of course much better than the Nasdaq since 1999. In 1999 to 2000, the peak of the Nasdaq outperformed gold. But thereafter, the Nasdaq completely imploded against gold. It's then recovered, but not to the high in year 2000. And so I think people may have too high expectations about gold going up all the time. I think it's normal that we have this correction. And somewhere around this $1,000 to $1,200 level, I suppose that gold will bottom out and go up again. But more than geopolitical events, I believe gold is driven by money printing. Now you may say, well, in the last 2 years, there was a lot of money printing in Japan and in Europe by the ECB. Why has gold not reacted on the upside? Well, this is the problem with money printing, and this has been observed already by Copernicus and by David Hume and the early economists, that when you print money, and as you would say in the words of Mr. Bernanke, if you drop the dollar bills onto the US, what the central bank doesn't control is what people will do with that money.
Yes.
You know, they can buy commodities, they can buy real estate, they can buy collectibles, they can buy stocks, they can buy bonds. That the Fed doesn't control really. And the problem with this money printing is that the money flows is not even into all assets and even into all consumer prices. So some prices go up, say healthcare cost, the educational cost of your children, they go up much more than your salary. And so people are then squeezed. The affordability becomes an issue. That's the problem of the economy today. The economy is doing okay, but it's doing particularly well for the not 1%, but the 0.01%. They have moved ahead a lot, and people, 50% of American people have no assets. They have no money. They don't benefit from money printing. Actually, they're hurt because their cost of living is going up, and it's going up more than the CPI would indicate.
So based on what we've already seen then in terms of central bank actions and the direction they seem to be heading in, what are we about to see?
Well, my view is that this recovery globally is very weak considering the money creation, in other words, the expansion of central banks' balance sheets, the credit creation, and the fiscal deficits everywhere. And the fiscal deficits, if you would account properly for the unfunded liabilities that are growing very rapidly, the deficits would be much larger and corporate profits would be much lower because the corporate sector also has unfunded liabilities. In a profit boom, they should allocate sufficient profits to the pension funds, but they didn't. And so my sense is the money printing will have to continue. The moment the economy slows down, more obviously than it has happened just recently, my view is the economy is already weak, very weak. At the high level, but weak, it's not growing anymore. But the Fed thinks, yeah, well, the economy is doing fine because they obviously don't talk to ordinary people. You understand? The Fed and their advisors are all people who sit in glass palaces. They're academics at universities. They are not the people that go to the neighborhood pub and talk to ordinary people about their lives. They live in an academic world that is completely detached from the reality. The way the elite was detached from the reality when they thought that Hillary would be elected, and they always thought that Trump had no chance, but he appealed to ordinary people's lives.
Okay, so based on that then, What do you feel like the role of gold in the world moving forward? What role is it going to assume?
Well, I believe that we don't know when, but the current system we have in place, where, I mean, when you think about it, we had theocracies in the world, we had royalties, we had oligarchies, we had democracies, but the democracy in Greece was a democracy of the elite. Not everybody could vote, and the same in Rome, the same until, say, the 1960s in Europe and in the US, we had essentially the elite that had voting rights. The blacks in America didn't have voting rights, and until the 20s or 30s, women didn't have voting rights, and so on. So it was a narrow group of people. Now we have full-fledged democracies, but it's incredible to me that democracies would assign so much power to the central bankers. When you think about it, the central banks today are the most powerful people in the world. They can manipulate currencies. Say, if they print money in Europe, but not in the US, it's likely that the euro weakens. It's not 100% sure, but it's likely. Eventually it will. If the Fed, in concert with other central banks, lowers interest rates to zero, then bonds rally, and you can have artificially low interest rates. Interest rates in Europe today are lower than they've ever been in the history of mankind. You know, it's completely artificial. Also, if you look at the balance sheet, say, of Japan, of the government, that the 10 years JGB would have a negative yield. I mean, unthinkable. Then you look at the JGBs and German bonds, and European bonds. Why should Italy have a lower yield on the 10 years than the US? I mean, I hope that the US is still a better credit than Italy, but I don't know.
Yeah, maybe not, we don't know.
Maybe they'll produce so many Ferraris that they'll become affluent. But all I'm saying is we have very manipulated markets, and the financial service industry, of course, will never or only seldom attack central bankers, because if you're Bridgewater or if you're Fidelity or if you're Vanguard, your income goes up the more assets you have and the higher these assets are valued. So you benefit from money printing.
Right.
I also benefit from money printing, I should say. Thank you, Ms. Yellen. You increased my asset value very substantially since 2009. But that, I would say, as a selfish investor, as an observing economist, the current policies of central banks can only end in disaster. The only question is, between today and the hour of truth, what will happen? You see, when you print money, in theory, say I'm very bearish about the world, but if you print money, when you think it through, the most dangerous asset could be cash, because that could become worthless before the hour of truth happens.
Yes.
So by being in equities and by being in gold and also having some exposure to bonds, you have some diversification, and then also some real estate. But ideally, you have a diversification also geographically. Not all your asset in the US, not all your asset in Europe, not all your assets in Australia. So you need this diversification, and then you can hope that when the hour of truth occurs, you will only lose, say, 50% of your assets, but your neighbor loses everything.
Right.
So relatively speaking, you will have done very well, relatively.
Dr. Faber, unfortunately I have to end it there, but thank you so much for your time.
My pleasure, my pleasure.